Hello, and welcome to Paul's Political Program. I know I'm only reading off a Word document, but nonetheless, I am questioning whether or not enough ordinary American people care enough to do something to help America solve our problems. I am going to give the benefit of the doubt. Can ordinary American people, without a lot of money, start a revolution using the Amway teaching system? And I don't mean selling their products, but the method. Via social networking like Facebook, YouTube, Twitter, and whatever other social network is available to use, like they did in the Arab Spring. Today's program is part one of Unequal Economy Equation. $2.99 for a gallon of milk, $3.29 for a gallon of gas, $8.50 an hour, can't afford health insurance, other stuff, etc. equals can't survive. Soup lines and living in the Salvation Army are on the streets. In order to take price-reducing measures, it is necessary to determine the causes of the increases. This overview can help the policymakers of the world develop policy that will slow down price increases. Agricultural markets. Food prices have been steadily rising since 2006. Agricultural prices fluctuate due to where supply is heavily dependent on the weather and demand is relatively stable. Now that both agricultural prices and the price of crude oil are rising, the prices of processed and unprocessed foods are higher. Here's an article from About.com US Economy called Why Are Crude Oil Prices Rising? People are concerned because gas and oil prices are rising sooner than they did in the past. However, the same forces are at play. Some of it is supply and demand, but more of it is based on the expectations of commodities markets. The price of oil is driven by much more than supply and demand. This was proven in 2008. Thanks to the recession, global demand in 2008 was actually down and global supply was up. Prices rose nevertheless. Oil consumption decreased from 86.66 million barrels per day in the fourth quarter of 2007 to 85.73 million barrels per day in the first quarter of 2008. At the same time, supply increased from 85.49 to 86.17 million barrels per day. According to the laws of supply and demand, prices should have decreased. Instead, they increased about 25% in that time, from 87.79 to 110.21 a barrel. Commodities trading drove up oil prices. Why? Although the EIA pinned part of the blame on volatility in Venezuela and Nigeria, it warned of an influx of investment money into commodities markets. Investors were stampeding out of the falling real estate and stock markets. Instead, they diverted their funds to oil futures. This sudden surge drove up oil prices, creating a speculative bubble. The bubble soon spread to other commodities. Investor funds swamped wheat, gold, and other related futures markets. This speculation drove up food prices dramatically around the world. The result? Food riots in less developed countries by people facing starvation. High oil prices are also driven by a decline in the dollar. Most oil contracts around the world are traded in dollars. As a result, oil exporting countries usually peg their currency to the dollar. When the dollar declines, so do their oil revenues, but their costs go up. Therefore, OPEC must raise the price of oil to maintain its profit margins and keep costs of imported goods constant. However, OPEC doesn't want oil prices too high or alternative fuel sources start to look good. Oh darn. OPEC has said its target price for oil is between $70 and $80 a barrel. In 2008, Saudi Arabia announced it would increase supply. This was one reason prices started to drop. If the global economy is healthier than in 2008, why wouldn't oil prices be higher? That's because there are many more outlets for investment funds. In 2008, the global markets were so risky and uncertain, investors turned from stocks, bonds, and even housing to the US dollar, gold, and oil. In 2012, despite uncertainty around the Eurozone crisis, investors have many more options. The stock market is rising, the bond market is less risky, and even housing is seen as less dismal. Although the global market is still in slow growth mode, it is stabilizing, and that means oil prices should break the peak hit in 2008. Now that we have some general information to go on, wouldn't common sense dictate that this system needs to go and a totally new and fair replacement system to all be implemented? Shouldn't the business rule make 10 cents off everyone and not $1 off of one person be practiced? Here are some more articles and links. High oil prices caused by Wall Street, not OPEC. And here's some links, more links, how to cope with high oil prices and related articles. There you go. Well, comments and solutions are always welcome. Thank you and have a great day.